What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Tuesday, April 30th. All right, guys, a monster move out of Tesla stock here today. It's up $25.76 per share. It's plus 15.31%, of course, on news that Elon went ahead and got Chinese approval for full self-driving. The stock, gapping up overnight, really, and then continuing the uptrend throughout the majority of pre-market, making a couple, or really one, big pump and holding the majority of the move into the close. So listen, let's take a look and pull out all the bias that Tesla was willing to give us here today. We'll do a volume profile analysis. We'll take a look at all the psychological levels that I and a lot of other traders are watching on the longer time frames. We'll take a look at the actual directional bias and the expected move. Ready? Let's do it. So let's get started by peeling back a layer of the onion and taking a look at the volume profile here on the 5-minute chart. I suppose we'll include a little bit of pre-market as the volume started to ramp up a tad. Listen, guys, by the way, if you're new here, I'd greatly appreciate if you subscribe to the channel. I'm covering Tesla every single day, and I'll keep the Tesla videos coming, so I appreciate it. Now, the volume profile. Really what we're doing here, guys, is we're looking at the volume profile as a separate entity entirely compared to the price action, and we're looking for the price action. We know what happened. We're looking at it right now, right? But if we take a look under the hood, so to speak, did we see any obvious signs in the volume profile that supported the price action or even went against the price action? It's another layer of bias that we can pull out. So if we look in the pre-market, guys, you can see that the volume started to ramp up, but there really wasn't a sample size for me to confidently pull anything out of there. So let's move on to intraday. Okay, and really I think what I'm primarily interested in here is this big upside move and then the fade that we got off the backside of that. So if we look, we got a very contextual open, volume faded off the open. That's incredibly normal. However, if we look through, right, this is the move right here. If we look through the volume here, you can see an overwhelming amount of green bars compared to red. And on the green bars, we're seeing volume pops broken up by a fade on a red bar. Volume increasing, lower volume on a red bar. Volume increasing, a little bit lower than average, at least between these two, on the red bar. Right? And it's just one. It gets broken up by one, and then we're back to 5 in a row on the green side. And another supporting, if we take a look at that, especially on this bar, we had that big wick, which means the sellers tried to take it down on the highest volume red bar that we got throughout that entire series, and they couldn't do so, which tells me with that big wick that this was a battle bar, okay, which means that this volume, a good chunk of it at least, was made up by buyers anyway, and we know that because there was a big wick, right? The sellers tried to take it down, buyers brought it right back up. That takes a little bit of volume, pumping up the volume on this red bar anyway. So listen, guys, clearly throughout this move that we got upside on the intraday session, which is what I'm really interested in, there's a good amount of bullish bias. The volume is a little higher than we expect that time of day. And then as soon as we hit the intraday high, right before 199, we got that bigger fade and volume slowly started to pull back. Okay, that tells me there's some obvious bullish bias going on when we take a look under the hood of this actual big pump upside. This is like the same kind of mentality that I'm using on a shorter time frame when I'm scalping like in-play stocks every day, which, by the way, I alert those in-play stocks in real time to the group every day. So every tier level, membership level, gold through platinum, gets access to the in-play alerts, as well as, of course, a variety of other benefits, perks. And that link in the pinned comment, that'll let you get grandfathered in at the current rate, so you're kind of like immune, right, to future price raises. So let's move on here now and take a look at the psychological self-fulfilling prophecy levels that me, funds, institutions, traders, probably you, are watching as we head into tomorrow here on Tesla. Now today, on the 30-minute in particular, this news pushed us above the 50 period, which we actually gave up late in the day on Friday. We reclaimed that today. It's one of those days. I mean, the stock's up 15%. So no, we did not get a retest. You guys know I like to see retests on reclaims of things like this. But when we're dealing with a macro day, a news catalyst day, I think that's a little bit of a weird ask to say, well, I'm unhappy because we didn't actually get a confirmation. Listen, here's what I'm looking for. What I mean by confirmation, right, is like a reclaim, and then you get a pullback, test it, and then bounce away on high volume. That is an actual test and confirmation saying, hey, listen, the market's looking at this, we're all paying attention to this, and this is support now. Okay. The way I'd rather see this go, given the day to day that obviously bulls benefited greatly from, right? What I want to see really is, this is the 30 minute, let's not forget, and this is the 50 period moving average. It moves quickly. So tomorrow, guys, bulls, I want to see this 50 period get yanked up as hard as possible with the stock ideally holding the move. Okay, any downside test, by the way, and this is likely to continue upside, the 50 period is likely to continue upside, which closes the gap that we currently see between the stock price and the 50 period. And any downside test of the 50 period, wherever it ends up being at that time, bulls, I want to see a hold, a high volume bounce. Whereas bears, goal number one tomorrow on the 30-minute chart is to get back below the 50 period, reclaiming that as resistance. Let's move on here to the 4-hour chart. And a big drive up out of the hole for Tesla this last week or so since earnings. Guys, a similar situation here on the 4 hours. Look at this. We reclaimed the 200 period just by default of today's news, okay? The 200 period on the 4 hour is a slow-moving moving average, guys. So in the coming days, the only thing that I'm paying attention to on Tesla on the 4 hour, I suppose, unless we were to see a big tank off and these come back into play, well, then we have to pay attention to them, right? But really, if I'm a bull, I want to see the 50 period, which is going to move more quickly than the 200 period, move upside as quickly as possible, looking for a like a crossover of the 50 of the 200, not for the sake of the crossover, not because it's a golden cross and it means something. It's completely overhyped. I think it's very silly. The reason I want to see that is because the 50 period moves more quickly than the 200 period, and I want as many psychological levels, or levels that are seen as psychological support, as close to the new stock price as possible, which means getting high as quickly as possible. Okay? So this is one of the problems, okay, with having, I mean, I don't know if you can call it a problem. It's a good problem to have if you're a bull. If you're a bear, you have problems all around today. But I think one of the big problems with having big days like this is that all the slower moving psychological levels that people look to as support levels, they kind of get left behind. So now you need to ideally have volume come in and really yank these levels up. That's why the 30 minute is so great, because these levels move, the 50 period at least, moves very quickly upside and can provide some psychological support potentially while we wait on like the 4 hour, and especially the daily. It's really all I'm watching here on the 4 hour. Bears, you know, a lot of you bears are going to have the mentality of like, look at this 4 hour chart. Like there's nothing holding this thing up. There's no psychological downside support. And bears on this 4 hour chart in particular, you would be right. So bulls, just be aware that that is what the bears are thinking. Understand the mentality of the enemy, so to speak. All right. The most important chart of all, guys, is the daily. Big day today. Take a look at this. See that white line? That's on every fund, like hedge fund, every institution's, every retail investor, trader's chart in the world. The 50-day moving average on the daily. It's a big deal. We gapped above that today and held, of course. We gapped out of the 166.50 to 177.50 channel that we've been talking about a lot on Tesla as of late. You can see that that's been a pain to get out of over the last month and a half, really. And a lot of problems were just solved on Tesla in one day, but it's just that it's one day. And I find it hard to trust one day without seeing confirmation. Okay? Now, that doesn't mean that I'm bearish on Tesla necessarily. What I mean is that I want to see confirmation, like we just discussed on the other time frames, of seeing holds. Now, on the daily, what does that look like? Well, we have two psychological levels in kind of like right next to us, right? One of those is much more important, I would say. We have 190 and $200 a share. Bears, any test of $200 a share, you want to reject that as hard as you can. Ideally, get back below 190, start that stair step back down. Every $10 or so on Tesla in this price range is going to be a psychological level. Bulls, Priority number 2, I would say, is hold 190. Priority number 1, get above $200 a share. We kind of rejected earlier, in front of that, about 199 here today. Get above $200 a share and hold above that. That is a huge psychological, therefore technical level, that a break and hold of 200 for as much time as possible intraday, holding above that, allowing volume to come in a big sample size to say, hey, we agree with this. That's a tremendous deal on the stock. That would be a big win for bulls. Okay, implied volatility here. Let's take a look. It spiked today, not unexpected on the move that we got. Okay, but still sitting in about the mid-range. All right, so kind of no man's land as far as playing IV specific options plays. Just be aware that when this goes to extremes, it opens up opportunity and some danger depending on how you're positioned. Now, let's take a look at the expected move. Okay, guys, the next expiration we have here is May 3rd. Now, that's, of course, going to be this coming Friday. So when we don't have daily expirations, like on most stocks, we have to do a little bit of guesswork to the best of our ability. So the expected move by Friday's close compared to today, Monday's close, is plus or minus $12.86 per share. Okay, we have 4 trading days left, Tuesday, Wednesday, Thursday, Friday, before that close on Friday. And there's no earnings between now and then, which would give us an outsized expectation for one day. So what we can do is we can take that $12.86 expected move, volatility expectation, right, by Friday, and we can divide that by 4 trading days. That gives us an expectation by tomorrow's close, because it changes every day. So just for tomorrow's close, of plus or minus $3.22 per share. But hang on, we're not done. I like to add back in this market 50% to make up for that being an expectation, that first number, of 4 green days in a row or 4 red days in a row from here. Okay, I add back 50% in this market. I find that's working relatively well to get that 1 standard deviation expected move heading into tomorrow of about $4.82 per share, plus or minus. That's the volatility expectation with a little bit of guesswork to give us a decent idea of how the options market is feeling about volatility tomorrow. By design, there's no directional bias built into expected move. That's by design, okay? We get the volatility bias first by doing the analysis, and then we look at expected move, and that equation can be deadly if you get really good at using that, having a directional bias, and then having a volatility bias, comparing that to the market volatility expectation, okay? And if you disagree with that, that's actually a good thing, because that opens up some potential opportunity for you. But there's one more thing we can do for directional bias, okay? We're not done yet. Take a look. The options bias, right? We have a whole bunch of options volume from just today. 4.51 million total contracts traded today. That is a tremendous sample size on Tesla. That is very high for Tesla. That's great. We can get some good data out of this. 2.65 million of those were calls, and 1.87 million were puts. So we're seeing a pretty heavy call side bias, bullish bias on Tesla here today. And since this video is mostly geared toward tomorrow, Tuesday, I like to break this down by time frame and go, okay, what are the short-term gamblers doing? The 0 to 20 delta range, right? Gamblers, speculators, there's a time and a place, right? The 0 to 20 delta range has 960,000 calls and 926,000 puts. So the call side bias, it actually is more timid out of the short-term speculators today, heading into the next few days here, but it's still slightly leaning to the bullish side, just not quite as much as the overall ratio. So both of those things, in my opinion, are well worth knowing. All right, guys, listen, hey, if you get value out of these Tesla videos, I ask you to do one thing. It's free. It takes half a second. Just leave a like and then get out of here. I appreciate it, and I'll see you in the next one.